Hi, this is Craig, the options linebacker. This is the weekend report for Sunday, September 19th. We'll start off with a monthly chart of the S&P 500, and then when we get down to the daily chart on the S&P 500, I think what we'll see is that there's just a couple of different options, so it's a fairly simple analysis this weekend. Now, the big tension on the monthly chart is the fact that we're still in a secular bear market. So this is a lower high with a lower low. So right now we're still in a longer term downtrend going all the way back to 2007. So for the past 3 years, lower highs and lower lows. But this little cyclical bull market is saying, hey, what about me? I'm doing pretty well here myself. And so this is so far, as far as the cyclical bull, this is a higher low. Now what we're waiting to see is whether or not the longer term pattern of the secular bear is going to take over and push this thing back down again. So that's the tension that we're seeing right around this area, and frankly this is why we're seeing sideways price action for about the last 4 months. Now as we go in one time frame to the weekly chart, we're seeing the same kind of look where we saw this broadening wedge pattern. We talked about them being bearish, and we did slip down to the 38% retracement of this entire move, but so far that's really not that bad of a deal. That's a simple correction. But as you can see, we do have the potential to triple top at the S&P 1130 level and create that complex lower high, which would eventually lead to lower prices. So that's the bear case on the weekly chart. The bull case on the weekly chart's a little simpler, so if the price is able to get above that resistance, it's got a lot of room left to run at this point. The other things I like about this is the fact that we do have a well-formed inverted head and shoulders pattern on here, and most importantly is that we have what I like to call that higher low down there. So that's kind of important, is that we have that higher low that shows that there is some commitment to turning things around just when they look to be the most bearish and start to head higher from there. So let's now move into the daily chart, and you can see by looking at this chart that we've started this pattern again of crawling up the Bollinger Band. So this is very similar to what we saw earlier in the spring, where we just had a move that just had no pullbacks at all. This was frustrating for everybody, bulls and bears alike, because of the fact that the bulls couldn't get a pullback, so they were forced to chase the move, and bears were looking for a pullback so they could get out of their positions, and they were forced to cover at prices that were much higher than they wanted. So everybody was forced to kind of chase this move, and they usually don't end very well when they get to be this bullish and everybody is this complacent about things, and this is why we had that crash back in early May. But we're not going to look that far forward just yet. We're just going to talk about the two possible ways that I think this is going to resolve here in the short term over the next few weeks. The first possible option is if the prices just, as we talked about earlier, just sort of start melting to the upside. Now, I think the first way that this will be characterized is that the price will get over and above S&P 1131, which is this so far double top level of resistance up here. It'll get over this level, and then we'll see a test from the top at 1131, and it'll just keep on going like this, just day after day in wonderment. And the bears will again insist that the chart goes down. The bulls that are on the sideline will insist that we get a pullback. None of those will happen. It will just continue to melt up. So that's option number one, the melt up option. Option number two is that we do see a defined pullback. Now, where might that pullback show up? Now, what I've done is I've drawn fib retracements starting at the bottom here in early September, late August, and they go all the way up to the recent highs on Friday. So if we were to see a 38% pullback, we'd see a price movement down to just below S&P 1100 on the cash index. We could go to a 50% pullback. That would be a deeper pullback. It's a little bit more unlikely, especially with this emotional move off the bottom here, with no pullbacks along the way, that we'd see all of a sudden a very deep pullback like this. But still possible down to the 50% at 1085. And lastly, we could see something as deep as about S&P 1075 and still retain that higher low status, but I don't think so. I think we're much more likely to see something that rebounds off of S&P 1100. Now, one of the indicators that supports this pullback option is the fact of the daily advancers on the New York Stock Exchange starting to become lower highs. We've certainly had higher prices in the market over the last couple of weeks. However, what we're starting to see is these lower highs as far as daily advancers showing up. So this one was on Friday. Friday was obviously a much higher price than a couple of weeks ago, but we're seeing a fewer numbers of these daily advancers making new highs. Same token, this is what we saw in late August, was we saw a bullish divergence showing up here in the advancers, showing that that move was likely to be bottoming out. Now, what's going to drive the market into these moves, whether it's to the melt up option to the upside or whether we see some kind of a pullback to that S&P 1100? Well, news is always going to be the driver. If the news provides some information that is not yet anticipated, not yet priced into the market, has not been discounted by the market yet. So that always is the risk here. And the biggest risk during the week is the FOMC meeting at 2:15 Eastern on Tuesday. However, on Monday, the president is speaking at noon on CNBC. I think the risk there is typically to the downside, as that pattern has been there for the last 4 to 5 years. Whenever the commander-in-chief does get in front of a microphone, it's usually the risk is to the downside. We also have some important home price numbers that are coming out later on this week. Of course, jobless claims, existing home sales, and then new home sales on Friday. So this is really retail housing week. Now, just to be objective here, the very last possibility that I would see for the market making a move, again, I talked about the melt-up option, I talked about the pullback option. So far, I haven't really talked about anything all that bearish because of the fact that the market did take out the prior swing high at 1100 and took it out with a lot of velocity. So I don't think we have anything bearish setting up for this week, but we would know if we do, if this 62% retracement is taken out at S&P 1075 and prices close below there, then I think that's the bearish move. Again, I don't think that is going to be happening this week. I think any dip, any decent dip is going to be bought in the short term until the daily chart shows up with a lower high, and that'll be our signal that we may start to see this fractal move to the downside unfold. Well, that, folks, it's time for me to watch some football, so you have yourself a great weekend, and we'll catch you next week. Take care.